Whoa, it's Tuesday night, July 22nd, and today silver set another 14-year high and closed at $39.33. So what is driving all of this? I've pointed out many times, we've got some very weak resistance back here from 2011. And this resistance, most of the people that bought back then, they either sold or they're hanging on for higher prices. So there's not going to be a lot of selling coming into the market from these purchases way back in 2011. This is going to be weaker technical resistance. The people that read tea leaves and goat bones, when chartists all are looking at the same thing, it becomes a self-fulfilling prophecy. Too many people are going to be placing sell orders right at around these prices. So you're going to see a little bit of resistance in the $33 area and up at 48. But what is driving this breakout, these prices surging in silver? Let's take a look. Hans Attorney says something big is coming in the silver market and fast. Let's connect the dots. 1. Over the past days, multiple signals have emerged that point to a massive shift in the silver landscape. What used to be a boring, manipulated market is now heating up like never before. 2. Physical deliveries are exploding. On the COMEX, silver deliveries just broke out, nearly 2 million ounces per day, matching global daily production. Now let that sink in for a moment. On the Commodities Exchange in New York, deliveries match global daily production of silver, never mind the rest of the exchanges around the world. Industries, investors, and shorts are now competing for metal. Supply squeeze incoming. Now, Alan is going to cover this same tweet in another video, and he's going to verify all of this and analyze it for you. We don't want to spread any misinformation here. So we're going to be verifying you all of this and giving you the correct information. 3, LBMA's silver reserves are critically low. TD Securities reports only 155 million ounces of free float silver remain in London, the lowest in recorded history. That's not a typo. The vaults are drying up. 4, EFP and OTC markets are dislocating. I hate it when people use a bunch of acronyms. What's an EFP? That stands for exchange for physical. And OTC markets are dislocating. Silver lease rates are spiking, 6% plus premiums widening. A perfect storm is forming in both Commodities Exchange and London. OTC is getting dangerously tight. This isn't normal. 5, China's top coin market is going into overdrive. I'm going to skip this one. It's about a specific collector coin, and there's a problem in the math here. So Hansa, you may want to double check the math. 6, speculative capital is flooding in. Retail and institutional money are finally noticing silver's setup. Tight supply, high industrial demand, no excess mining capacity, ridiculously cheap compared to gold. They're buying, and fear of missing out is real. 7, tariffs and geopolitics add fuel to the fire. The U.S. just slapped a 30% tariff on silver from Mexico and the EU, who supply over 25% of U.S. imports. This could trigger a supply chain panic and price spike. 8, what does this all mean? We're not just looking at a price rally. We're witnessing the early stages of a structural breakout, one that could end decades of suppression. I hope so. 9, TD:DR. I'm not up on all of this stuff. I had to look that one up too. It means too long, didn't read. So this is a synopsis of the whole tweet. Physical market is on fire. Inventories vanishing. Demand surging. Geopolitics tightening. Price finally reacting. Silver awakening is real. Are you positioned? Personally, yes, I've been planning on this now for more than 20 years. So, Mr. Yuppie, It's literally impossible to borrow silver right now. The shorts are shissing their pants. God, do I ever love seeing short funds burn to the ground. And you can see this is the borrow rates for SLV if you want to short silver on SLV, and it just had a huge spike. Tavi Costa says silver lease rates are surging just like platinum did before its major breakout a few weeks ago. If you ask me, if it looks like a duck and quacks like a duck. So the silver lease rates above 6%. Let's see what platinum did. Okay, so this is platinum. So the lease rates on platinum spiked just like that before this major breakout. And what you see here is platinum below $1,000 an ounce, and then suddenly $1,464 in just a little over 2 months, more than a 50% move, for about a 50% move from in 2 months and a week or so. Then Nostradamus says, I don't know who needs to hear this, but gold is in plentiful supply. Silver is in its 5th year of deficit, and a few bankers are 400 million ounces short they will need to find somewhere. This is from Enough. 483 million ounces of silver were dumped into the market yesterday in an hour in an effort to stop this breakout in silver. This short position is now completely underwater, which means that the banksters that sold those ounces need to come up with physical. So this volume bar is the 483 million ounces that got dumped into the market. Is that from one source or just a couple sources? I don't know. But, it's very interesting, the headlines that are happening. I'm just reading you what other people are saying. Alan is going to investigate more of this stuff and try and corroborate this. So this is from Mr. Yuppie again, just in. Citi Group backing silver over gold. Wow, they have a price target of $43, but what they don't know is that it's going to be a heck of a lot higher than that. So that's their 6 to 12 month outlook boosted to 43. But what I want to point out is that the 3-month forecast was raised to $40 from $38. Now this was on the 16th of July, and I looked up some other articles to confirm that the 16th is the day that Citigroup made this announcement that they're upping their forecast to 40. Why? Because this is the 16th, because 2 days before it hit 39.14. So it was only 86 cents away from their 3-month price forecast. So before they looked like complete morons, they had to raise that forecast. But here, just 4 days, 4 trading, 1, 2, 3. This is when they, This is when they changed their forecast. 1, 2, 3, 4 days later, it hit 39.33 on the closing. That is just 67 cents away from their 3-month target that it could reach that target. So will they look like even bigger morons tomorrow or the next day or the next? I guarantee that. Well, I don't guarantee, but within a very short period of time, the answer is most likely going to be yes. A great moron probability. Silver demand for solar panels 2023 versus 2030. I want to point this out. Conservative projection. So you had about 16% of global supply going to solar panels, and here you've got 25% is a conservative projection. Now, there's not that much silver in each solar panel. And so $50 silver, $100 silver, it isn't going to raise the cost of each solar panel by that much. But when you get up to $700 silver, they're going to be really trying to conserve on this, or it may even slow down the sale of solar panels. This is from Just Dario. And he says 409 to 1 is the paper to real silver. So you've got 400 people dancing around on the Titanic for each seat in a lifeboat. Now, this is futures, options, swaps, forwards, derivatives, and ETFs. So it's everything. I don't know if it's accurate or not, but this is the information that's going around, and it's great to see all of this going around. Now, I couldn't get this stock chart's performance chart to go back to January 2nd, so it starts on the 3rd. The price action for the year normally starts on the 2nd. But the S&P 500 is up 6.11%. Gold is up 28.77%, and silver is up 31.51%. So there you go. Now, I've shown this in the last few videos, but I just want to quickly run through it again because it pertains to the next couple of frames. So if you take the performance of these different items, their percentage change from January of 1980 until 2022, the Consumer Price Index would put silver at $200 per ounce. If you're comparing it to a single-family median price home, $468. The stock market, $2,178. The 10-year Treasury bond, $1,059. U.S. GDP, the same as real estate, $468. Currency in circulation, $971. M2, $781. And the average of all of these was $921. And I said, I don't think it's going there, but this is a possibility, this range of things. So that 781, maybe that's not too irrational when you see what I've got coming up. So this is Value Seeker, adjusted silver for the M2 currency supply growth. And this was on July 14th. Silver was at 38.89, and when you adjust it for the growth of the M2 currency supply, you end up with close to $520 per ounce silver. That was the price in today's devalued dollars of silver in January of 1980 when it peaked. Now, I talked with John Williams of Shadow Government Statistics, shadowstats.com, recently, and he sent me some data. So I had Alan create this chart. And now you've got to realize that, first of all, this is the CP lie, the one that the government currently produces. And if you ever hear somebody talk about the CP lie, that I coined that term from my first book. And so that's where it came from. This is John Williams' alternate CPI. Now, what is that alternate CPI? It's the government numbers. It is the United States government Consumer Price Index methodology from World War II to 1982, and then they started fiddling with it. So this isn't some conspiracy theorist, lunatic out there. John is only applying U.S. government methodology, what they used to use, because he was an insurance actuary, and everything started to calculate wrong after 1982, and he wondered why. He went back and found out that the U.S. government had fiddled with the inflation statistics in order to do things like screw Social Security recipients out of the full amount that they're owed. It doesn't keep up with true inflation. Is anybody ready for $2,000 an ounce silver? That's what I want to know. But always remember, silver is a bad investment, at least according to this guy, Dave Ramsey. When he said it, it was $24. The last time he said it, silver was $24 and gold was under $2,000. I want to thank you for watching. Please like and subscribe. And if you're going to buy some gold and silver, consider us for your dealer. That's how I support all of this. We'll see you next time.
Invest and earn up to $2,000 in bonus silver at GoldSilver.com. It's easy. Step 1. Open any GoldSilver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit goldsilver.com/free silver to claim your silver.